Hi there, and welcome to the Stockscores Market Minutes for July 19th, 2013. This week's topic, what is performance? When judging the performance of a trade, most people look simply at percentage gain or perhaps dollar gain. But really, performance is relative to risk and the historic volatility of a stock. You know, a penny stock that makes a 10% gain is very different than a large cap blue chip stock that makes the same gain. And the reason is because the large cap stock will be less volatile and therefore less risky. To accurately judge percentage gain, you must consider the gain made relative to the historic volatility of the stock. Now, I do this with linear regression, but ultimately you want to compare what a stock would normally do within a certain time frame and then compare that to what it actually does to determine true performance. It's all about a stock beating itself and beating its historic volatility. All right, let's take a look at the markets. The S&P 500 continues to show some really pretty decent strength. It's gone through to new local highs. It is at the resistance of the upward trend line that I've drawn in red, which is the one that was touched the most times. However, there is still some room to the top of the channel on that upward envelope that was touched just once back in May. What can't be denied is that the buyers are in control, and although the market's volume has been relatively low, and although the intraday volatility has been relatively low, it can also be said that the buyers are in control of the market and there's really no sign of weakness. And so I think that this is a bullish market, but one that is risky simply because we are coming into resistance. The same can be said for the TSX, which has had a really good comeback over the last 5 weeks, but it is now at resistance where it should get stuck. Of course, in the market, things that should happen often don't, but we have to play the probabilities. And I can simply say that the market should stall here, but it could break through that red line of resistance and continue higher. The TLT, which represents the U.S. Treasury bond market, has broken its downward trend, and it is therefore likely that we will see either some sideways action in treasuries or perhaps a little bit of a comeback. With bonds, of course, as price goes up, yield goes down, and this rapid decline in bond prices over the last little while has meant that borrowing costs have increased quite dramatically over the last 2.5 months. So this would be healthy for the overall economy in many ways. Emerging markets have broken their downward trend line. Quite a bit of volatility here, but it is good to see this market starting to turn after really being in a bearish state for a number of months. US dollar, lots of volatility, therefore lots of uncertainty. In the short term, we've seen some selling pressure on the US dollar, but in the big picture, really this is a market that is headed sideways and lots of uncertainty, and therefore it's a little bit difficult to predict. But if there is continued weakness in the US dollar, that could give some assistance to commodity prices. Gold has rallied up to its downward trend line and is trying to make a break through that downward trend line. Something important to watch this week is if it can break that downward trend line, I've drawn it in red, then we could see a little bit of a resurgence in the precious metals market. For now, it remains bearish, but certainly it is one strong day away from reversing. The oil market has been exceptionally strong over the last 2 or 3 weeks, and it is showing no signs of giving that back yet, but it is a risky market. Anytime you see something like oil appreciate that quickly, you have to recognize that a pullback could be soon in the offering. Fear is at a low and is therefore not a factor in the market. I would say that it is perhaps that fear is turning to complacency. So my ratings on the stock market, US and Canadian stocks, are bullish, but with a real caveat there in that I think the market is risky and coming into resistance. And so while I am bullish, I would also say that it is a good idea to be very cautious with stocks as a pullback is quite likely in the near term. Gold, I remain bearish, but as I said, it's one day away from reversing its downward trend line, which would put it in the neutral camp, perhaps for a little bit of a comeback. Oil is bullish, but also risky given the recent gains. Stocks have been surprisingly strong, but appear risky. Gold has come back to the downward trend line where it should break down, but could break the pessimism. Emerging markets appear to be turning, and the lack of fear is approaching complacency. Well, that has been the Stockscores Market Minutes for July 19th, 2013. Have a great week in the market and trade well.